Welcome to the Trading Zone. I'm Joe Tigay of Equity Armor Investments. With me, as always, is my partner, Brian Stutland. Brian, how are you doing?
I'm doing great, Joe. Also a portfolio manager here at Equity Armor Investments, and on the Trading Zone every week, 1 p.m. Eastern, every Monday, we give not only what's going on in the markets, we talk about volatility and the VIX and option trading, trends in the general broad market of the S&P 500 and whatnot. And at the very end, we always give an exciting trade of the week that we've been pretty successful on. So we've got one coming to you. Has to do with artificial intelligence, investing. So I think you're going to want to check that all out.
Yeah, stick around to the end. Yeah, spoiler alert, it's in the title. It's going to be Broadcom. They got earnings coming out. They got earnings coming out this week. But there's been a narrative recently. There's been a narrative that the sales have been slowing. People are pessimistic for this report. Guidance is, really lofty. Are they going to be able to meet this guidance?
Well, yeah, it'll be interesting. I mean, I'm bullish. Obviously, we own Broadcom for clients. We own NVIDIA for clients. We have plays on the growth of artificial intelligence and networking and all that. So these are one of them. I think you're going to want to stick around and hear the trade on how to sort of maybe mitigate some of the risk factors in their earnings report.
Yeah, of course, key events this week. It is not November 18th. It is December 9th. But we have CPI this week. We have PPI this week. We're still in the middle of the quote-unquote Santa Claus rally, and we do have the Broadcom earnings. Taking a look at the skew, we look at this every week. This is a measurement of volatility in the S&P 500. It measures the 25 delta puts compared to the 25 delta calls. When people are paying up for the downside protection, things are considered to be a little risky. This closely matches the VIX chart. Maybe I think it has a little bit slightly ahead of it. Usually is one of the reasons why we like to track it. We're on the low end of the range. Absolutely. We have the low end of the range for VIX, low end of the range for this chart. It's definitely picking up today in a big way.
Yeah, continual higher lows in terms of put buyers. When they become cheap enough, put buyers want to jump back in, and it makes sense. I mean, look, the market's at all-time highs, just near there, and it makes sense to hedge with cheap puts when they get suppressed and people get too giddy about the upside call.
Yeah, this is kind of FOMO when you get like this area here, so it makes sense to pull back a little bit, rethink it. It's hard for the market really to rally when you get that upside call buying because people are going to hedge those calls or, et cetera. So it's really kind of a call wall, another way to think about it. Here is the futures curve. This is looking kind of normal here to me. Very low spot. The futures traders are expecting it to rise into the December expiration and definitely expecting a big rise into January and even February.
And I think when you look at the mean reversion factor of volatility, you see the term structure a month ago, 2 months ago. Yes, granted, that was around the election and Fed decisions and unemployment reports, but it is a mean reverting product. And so the trend to me seems like, could we get back up towards those two, month ago, 2 months ago kind of curve? That's probably the upside to the VIX, but certainly one where now it seems like the rubber band's been stretched a little bit where we could pop back up a little bit. We're seeing that, a little boost today, a little pop in VIX futures today. Joe, we bought some for clients last week, so continue to hold it. But today's pop, I mean, we move a little bit higher. I wouldn't mind taking some of it off, and getting a refresh, but still looking for that mean reversion.
Yeah, definitely looking for that mean reversion. VIX is still very cheap. Easy to be said. Another way to look at this market is to look at this trend. I've been following this all year long. Stubbornly, I'm not giving this trend up. It's just amazing how closely it's just been following this trend line, and it doesn't seem like it needs to or wants to crack into it. Almost seems a little bit on the higher end of the range. Of course, right at the edge of this lower former support is now a resistance.
Yeah, and so it seems like when you want to pull back off that green line, bottom of the neutrino, that's a buying opportunity or an opportunity to maybe take some hedging off. So since we're at the top end, I'm not quite ready to take hedging off, but that might change today. The market's selling off. We've had a big reversal off the open. So today might be some opportunity as it pulls off that trend line to take some hedging off.
Yeah, I mean, really sets up a potential for a move in either direction for me. Today's action, based off of the CPI PPI numbers. So if we get really positive, like a low inflation number, the market might just be in love with that and take off because we got some room to buy the dip. Also signaling, hey, maybe there's some angst here that if it's hot. So really sets up a potential for a move off of that number for me. NASDAQ, right in the middle of their trend. Another sign here that things could move in a hurry.
Yeah, and then take a look at whether the NASDAQ can hit the top end or the bottom end of this. I think we look at the ever popular semiconductor index and that sector as well, and what the SMH has been doing, and that really has that's the one concern right there, right, Joe? I mean, do you think
well,
this is
we
not
know
breaking
that
out?
the semiconductor as the leading indicator for the economy, when things are going good economically, this is leading the way. So the fact that it's not leading the way, I think that is a reason for concern.
Yeah, and that might be a reason for the Fed to cut rates in the following week. After that, when they meet, it's expected that the ECB is to cut rates this week, but we're going to get inflation data and expectations for core CPI to be at 3.3% year over year. That seems high. I don't know
But I
why
mean,
you would think
another
that.
way to think about this chart, though, Brian,
Yeah.
could be that we got astronomical expectations here, right? And like the market was just like, oh, got giddy. They saw the growth that NVIDIA was having. They saw the potential across the board, and they made those expectations super high. And then we've had just a few months to consolidate here as we've grown into those expectations. So we'll see. NVIDIA absolutely justified for me when they made their high in the middle of the year. The rest of the semiconductors, maybe not so much, but we'll see what brings what Broadcom brings for sure.
Well, NVIDIA, Broadcom, obviously two very key stocks towards this sector index to move it higher and move things with it and move the economy forward. So probably makes a good time to let's get into the big story of the week, which is really digesting where artificial intelligence comes from. How does that information get distributed? And, Joe, maybe you can lay out an example. I like using it as an indie race car. How would you compare sort of like a NVIDIA and a Broadcom, how they play into this web of artificial intelligence build out that we're looking at?
Yeah, so NVIDIA is the engine of the AI. It really is the high-powered, really fast component, and it's what makes things go super fast. Now, they have processing units which can go super duper fast, and you need these GPUs, you need these big pistons, big powerful engines to go really fast. But it's not really going to go anywhere by itself. I mean, think about it like a car. It needs a road to get around from place to place. That's where Broadcom is. Broadcom makes the connections between these really high-powered, fast race cars. They're the Ethernet cables. They're the routers. 5G is a component of that networking, connecting things together. And it also has big storage capabilities, big storage chips, which allows the data that these really fast computers are compounding to sit on. It's kind of like a gas tank. They're holding that gas for these powerful computers, and they really need to go together. So yes, these NVIDIA race cars, super fast, super powerful. You need more of them, and they need to be replaced more quickly. That's why the growth is more on the NVIDIA side. But it's not going to happen without the roads, without the gas to move the car around.
Yeah, for sure. So they do kind of go hand in hand. I mean, having said that, Joe, I would probably give a little bit higher PE to a NVIDIA versus a Broadcom. But let's just take a look at what these companies have done over the last 2 or 3 years, because it's tremendous. Both, forward PEs about the same. Like I said, I'm okay with the forward PE of NVIDIA being a little higher than Broadcom, but these PEs are not really unreasonable, and in fact, maybe too low. When you look at the net income growth of both these companies, take a look at NVIDIA here from 2023, going from 8 billion in net income to potentially next year 72 billion and 108 billion all the way out to 26. And then you look at Broadcom, also experiencing huge amounts of growth from 2022, 16 billion to 23 and 18, and then a huge jump to 23 on to 30 billion in net income. So 35% increase in sales with a 30 forward PE, to me is cheap. It's cheap, Joe, I think. So there's room to run, I think, for these stocks, as great a run as they have had.
Yeah, and it's just a sign. I mean, I would have thought this morning, looking up like these PE ratios, everyone's talking about these high PE ratios.
Yeah.
And yeah, if the Nasdaq itself were 35 or 30, you would say, oh, that's kind of high. If the S&P were 30, you'd say, oh, that's really high for the S&P. But these are the growth companies that are driving all this growth. You would expect these companies to be much higher than just 35, 30. So yeah, for me, I'm very comfortable with this growth, with these PEs, and it's makes for potential upside if everything starts working better, if the stock market starts rolling, if the economy's humming along. I mean, the story is there. Like, the Fed's cutting rates, Brian. If inflation's not going to be a problem, like the back end of the rates are going to come down too. So there's going to be potential for these large cap companies to grow. It makes sense. It makes sense. The upside is potential is still there.
Yeah, well, and at the very least, the downside, I think, is somewhat limited. I think, Joe, let's just get into the trade of the week here right now. Broadcom, obviously, being the one that we're going to be talking about. Earnings this week. How do we play this? If it seems like there's limited downside, given the valuations are not unreasonable, why don't you give me a breakdown of what their earnings are going to look like and how we can lay out a trade?
Yeah, well, I think we broke it down already, man. We talked about why we like it. We talked about the risks are just a slowing economy, essentially. Are they going to miss by on the revenue just a little bit? It's possible. Is it possible that they beat? I think it's equally possible. I think it's more likely that they beat, just given just looking at this story. I'm just saying what we know about NVIDIA. Their growth of 300% is just amazing, but they cannot exist without the connectivity, without the company like Broadcom. So their growth should pair each other. Now, it makes sense to give a higher multiple to NVIDIA. It makes sense that they're going to have more sales because you need more of those car or engine components to do it. But for me, I like the upside. I think that is obvious, and I, of course, just love the consolidation we have here going on over the past 2 years. Here's an area of consolidation followed by upward movement. I think we're in another area of consolidation, getting ready for that next upward move. We will see, of course. Nothing is guaranteed here, but Brian, why don't you break down the trade?
All right. Well, in doing this, I think when you look at the technicals on the chart, 160 being probably kind of a support area. So I want to take advantage of that. Yeah, you saw right there, Joe, it bounced nicely off there. So if the stock were to retest, I assume there would be some sort of level of support in that area. So if I'm looking at downside risk, I'm okay selling a put that would get me long the stock, that I'd get put to the stock. I can sell some insurance on the downside. Specifically in this one, I want to sell the June 160 put. So, I'm going out a little bit over 6 months here, which is going to give a couple earnings reports to give way in there. So the 160 strike level, I'm willing to buy the stock, right? I'm willing to be put to it. And I use that income of selling insurance on the downside to purchase an upside call, or kind of an at the money call, where I'm buying the 175 call, I'm selling the 210 strike call. If you saw before, average analyst target price about 197. So if I get called away at 210, that's above the analyst high side there. That would take the forward PE pretty significantly higher at that point, to which, valuations then start to be a little bit maybe overvalued. So I buy that call spread, right? In this trade, I pay 70 cents. Okay, so I am initially paying 70, but I'm not outlaying any cash like I normally would to buy stock. I actually keep that cash. I collect interest at over 4%, right? And so now I've offset the cost of this trade structure. In fact, I'm actually going to net collect income from, keeping cash around in case I need to buy the stock. And then I still get the participation rate from 175 to 210. So this is kind of a way to play into the earnings plus a couple more earnings. It's a bullish trade, no doubt, but it gives me some downside protection before I have to really actually jump in and buy the stock.
Yeah, and another thing I love about it, of course, that downside protection you mentioned. Owning the stock, you would be exposed to over 10% losses here down here. So you would not be exposed, or I would not be exposed to that loss if I put this trade on, this trade idea. And I'd be happy to buy it today, close to 180 for $160, for under 60. So that's why I like the downside protection. And then having said all that, I get to participate on the upside all the way up to 210, which that would be an area where I'd think about wanting to sell the call or get flat anyways.
Yeah, I mean, if I can make about 20% return in a little over 6 months, that's a pretty good annualized rate of return. If it blows through the 210 strike, again, we continue to update these trades every week, and so keep tuning in. We're going to do that. We're going to have a subscription agreement offering that actually auto sends you an email when we do update a trade. It gives you the trade, so in case you missed the show, you'll get that right into your inbox, and then you can trade yourself around that. And manage it yourself. But, certainly this is a suggestion that Joe and I like. And this is a trade I'll be, putting on for myself in this upcoming week ahead of the earnings play. So that's about it. Joe, make sure everybody tunes in to watch us, right? Every week, every Monday, 1 p.m. Eastern, we're here on the Trading Zone, sponsored by the MIAX, put on by the Trader Hub. Tune in every week. Join us for more trades, more information about volatility in the markets, and we'll look forward to seeing you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.